Maheshwari, author and portfolio manager at Basant Maheshwari Wealth Advisors. Basant, good morning. So, what do you do in a market like this? Still chase expensive stocks like Page Industries or look for bargain valuations in the mid caps? Your thoughts?
Good morning. Good to be with you again. We don't own Page. We've been out of it for 2 years. But you don't get bargains in a market like this. And we don't make money by buying bargains only, because when a bull market is in vogue, at least a section of the market says that there's a huge bull market going around in the select NBFC space, then you just go and buy the stocks and then you wait for. I think the focus should be more on whether the earnings are going to come by rather than on what PEs we are buying the stock, because experience has shown that stock prices don't fall unless the earnings start to disappoint. So obviously there's only 10-15% of the market where you can be sure and certain about the earnings part of it, but the balance 80-85% there are no earnings. So we can just buy them and say after 2 quarters it will be good, after 4 quarters it would be good. But it's a very selective case happening, and if the companies that we are buying, if they're growing at 40%, I think the stocks should do well. Just to give you an anecdotal evidence, I mean, if you just go back into history and you see companies that are growing earnings at 40-45%, the stock price tends to go 60-70% every year. So it happened with Page Industries between 2009 to 2015, because the peak starts to get re-rated. So it happened with Sun Pharma, it happened with L&T. So the question is not whether 40% earnings growth is cheap or expensive. The question is whether that 40% earnings growth is going to be sustainable or not. So with that in mind, we try and look for the 40% earnings growth, and of course things are not cheap at all. So if it goes wrong, we sell out, we take a view later on. That's how it is.
Okay. Morning, Basant. Always a pleasure listening to you. Well, let's start with what you discovered, I thought, earlier than most people in the market were speaking about housing finance. You introduced us to the Repco stock some time back, 2-3 years back. Now, is there still steam in that? If you looked at the Q4 earnings or FY17 earnings, are they in the category where earnings have been better than the rest, or at least promising?
Absolutely. I mean, we own 2 companies. That's a disclosure, not a recommendation, obviously. We've said that on CNBC also. Canfin Homes and PNB for the last so many quarters and years. But I think this space is giving you an indication that it wants to grow at 35, 40, 45%. And once RERA comes into vogue, right now the impact of RERA won't be felt because all the states haven't gone around implementing RERA. So after 1 quarter, once that happens, I think this is the space to win, and not just housing finance companies, anything related to housing. So because, I mean, if a house has been constructed, you need tiles, you need wash basins, you need plywood, you need everything. But it's safest to be with the financer because he can take possession of the house back. So I think that is how we are playing the game. And there's a tailwind happening, and the government is pushing it through. Even if you look at the monetary policy, which nobody understands better than you, Lata, I mean, they have just changed the risk weight. So it means that a company which was supposed to be diluting capital in FY19 can just push it again to FY20, because once the risk weights gets adjusted, then you can sweat your capital more. So I think there's an all-round push, and too much of a good stock can be wonderful. So that way.
No, actually, Basant, why I said that was, we had a very interesting comment of yours, which is running one of your beliefs that a stock bull run is normally for 6 years. You've given us the example of Infosys, 94 to 2000, L&T, 2002 to 2008, I think. Now, do you think housing finance, I looked at many of them after I saw your formula. Most of them are maximum into 1.5 years, 2 years. So we have a good thing going there.
No, but they started in 2013, if you look at it that way. Of course, we changed horses in 2014, 15 when we sold out of Grew and Repco and bought the other ones, the faster ones. So one more thing, if you look at it, the first year of a new government is mostly a bull market year. So 2019, assuming Mr. Modi gets elected to power and we have a bull market, I'm very afraid of what's going to happen beyond 2020, if you ask me, because that will be completing 6 years for these companies. And the first year of a new government, you don't see a bear market, because they're and we hope everything is going to happen and India is going to have a per capita income of $10,000 within the tenure of the current government. So that doesn't happen. But so 2019 should be a big bull year, maybe a blast off year. I don't know. It's all foolish of me to be coming and prophesizing all this on television. But we are just discussing.
No, these are interesting prophecies.
Evidence has shown. So 2019 and 2022 is housing for all. So if in 2009, even if 50% of Indians get a home in 2022, we won't have to wait till 2022 to make money. We'll make our money in 2019-20 because at that time brokerages would be discounting cash flow earnings up to 2025. So right now also, if you see a couple of reports, they've moved from price to book to PE ratios for the HFCs, and that's a nice thing to happen. That keeps on happening.
Okay, so history tells us that you need to bet on companies where the growth rate is high, say 35-40%, and then you can make money to the tune of 60-65%. Housing finance is one theme, and we're in the midst of that 6-year bull run for housing finance. Which are the other themes where we are seeing such high growth and there is still some upside left? That 6-year theory is not yet completed.
I mean, if you look at it globally, the largest market cap companies are Apple, Google, Facebook, Microsoft, So they're all consumer oriented. Housing finance is not finance. Who buys a house? The normal consumer. Bajaj Finance, we have an interest there. So who takes these consumer loans, these television loans? It's the Indian consumer. The NBFCs. In the banking space, HDFC Bank, IndusInd Bank, why do they go up? Because they have the retail portfolio which does well for them. The Punjab National Banks don't do well because they have a corporate portfolio. So even we see the consumer theme happening. We have a per capita, I think, of about $1,600-1,700. So if the per capita goes to say $2,500, you have roti, kapda, makan, and a lot more to spend. And you have cash flows against which these companies can lend you. And once the GST is implemented, the unorganized space is going to give a lot of way to the organized space. A lot of themes are happening, but I think anything focusing around the consumer should do well. And we like to play with 1 or 2 companies, and then we say the other companies we don't want to play because, there's too much to understand. So that is how we are positioned.
Are you taking any bets in pharma now, Basant? Because here at least the valuations are supportive, but the business headwinds still continue.
Oh, we've swallowed the bitter pill in pharma. So we made money some and we lost money, and all that experimentation last year. Net, when we look at the pharma romance that we had last year, we didn't make too much money because we lost a few here and there, we made a few here and there. So I think, Anuj, you follow the market so well, you look at the pulse. Things which are expensive remain expensive till the growth continues. So we'd rather buy a 40% growth company which is a little expensive than buy a 15% growth company which is cheap. Because we don't make money buying a cheap stock just because it remains cheap. You need a catalyst for a cheap stock to become expensive. So in a bull market, either you can count the risks or you can count the cash. So that's how it is.
Finally, okay, let me get one more theme in before we let you go. Financials. We saw this big growth in Edelweisses and the Motilals. Is that a 6-year theme?
I don't know, 6 years. I mean, basically, these are 20, 30-year themes, but the stock market will give us above average returns for 6-7 years. Then we discount everything to the moon. I think this is a huge space to be in. And we didn't buy these financials because we are ourselves in a portfolio management business. So we thought we were playing the game that way. But I think this is another big theme. As Indians get more money, they're going to put it into the markets. And that's how it is.
It's a fascinating conversation, Basant. Always to listen to you. Thank you so much for dropping by today in our studios. Okay.